Welcome back. Today is January 27th of 2022, and there's a lot going on in the stock markets, crypto markets around the world. So we are going to take a look at what's happening today as the markets continue to digest all of the Fed speak yesterday. And one of the questions that's being asked out there is, why did the markets sell off, and why are they continuing to sell off after Powell came out and said we're not raising rates till March and everything is looking good? Well, the biggest caveat to what Fed Chair Powell said that spooked the markets and giving them pause and concern is that he said we have a lot of room to raise interest rates given the current economic environment and employment picture. So basically, he signaled to Wall Street that we can raise rates quite a bit before we see that impacting one of their primary mandates, which is full employment. Their second mandate is stable prices, which is inflation. So they absolutely have to tackle inflation. We're coming into election cycle in the next couple of years. They have got to get inflation under control. And they did indicate that they're going to let markets decline, and the markets are going to test the Fed and push them to see if they're going to act. So I think in the overall scheme of the markets, the general financial markets, the stock market, we'll take a look at that in a second. We could probably see another 10 to 15% downside to see where the Fed stands at that point. So we have between now and March that the markets are going to continue to deleverage a little bit, push the Fed, and test their resolve. So we'll have to wait till we get there. But basically, that was the message that the Fed sent was, we understand inflation is important. That's our number one job, given the employment situation and economic activity out there. We have a lot of room to raise rates before they see any effect or impact on the economy. We had good, decent GDP numbers come out today, 6% increase in GDP. A lot of that's due to increased prices. But that gives the Fed even more reason to raise rates and be a little bit tougher and less accommodative on monetary policy. So let's go ahead and take a look at some of the news that's out here today and the charts. Bitcoin and cryptocurrency is coming under attack. The White House wants crypto rules as a matter of national security, so they are taking an executive action. There's a lot of buzz out there that Biden is going to release an executive order, executive action to institute crypto regulation here in a matter of weeks. So initially, this could send some shockwaves through the crypto community. We might see a little bit of price action off of this news, especially given the fact that the Treasury Secretary now, there's a bill in Congress that will give the Treasury Secretary unchecked and unilateral power to ban crypto transactions. So that, in accompaniment with this article about regulation and the executive order from the White House, could spook people. It could spook the markets. Jerry Brito on Twitter, go check out Jerry Brito. He wrote a nice little thread about the new bill in Congress and what it means. Jerry is also the executive director of Coin Center. So you definitely want to check out that page and see what's going on, protecting open blockchain networks and innovators' rights to use them. They're a lobbying group for the crypto community in DC. So check out Jerry Brito's Twitter page and his Twitter thread here on that bill in Congress. I think that would be good for you to, so you can kind of understand what's going on. And here's how I read this. Okay, there is a lot of money laundering going on out there. There are a lot of illegal transactions going on out there with the cryptocurrency community. There has been for a while. And especially with what's going on around the world with potential conflicts and things, a lot of terrorist activities and things are financed with and through cryptocurrency. Everybody knows that. That's no secret. It's a big part of that. It's also done with dollars. I'm not here to debate which one's better, which one's worse. The reality is it's much easier with cryptocurrency, and it's a big part of what's being done with cryptos and the NFT space. That's a big reason why a lot of these NFTs have sold for kind of the numbers that they've sold for. That's another video. We'll get into that on another day. But here's how I see this. So at the end of the day, what everybody is concerned about and wanting to deal with is they're wanting to rein in money laundering, terrorist activities, things like that, and help monitor these things. So what cryptocurrency needs and Bitcoin needs is regulation. We need regulation, guidance, we need rules. And what the benefit of this is, and there's always unintended consequences of good intentions. So some of these intentions are good. There's going to be unintended consequences, and there's going to be debate, and we'll have to work through it. And the good news is Washington listens to the crypto community. A lot of people blew up their phones the last time there was a bill in Congress to that create a lot of buzz over exchanges having to report every transaction. So at the end of the day, this is regulation, which is good for the space. This is what's going to bring broader scale adoption. It's what's going to bring the average investor into the space when they know that there's rules, regulation, consistency, when there's insurance on accounts, things like that. When the exchanges are audited, monitored, and have to comply with regulatory bodies between the SEC and the FTC, and who's going to control what. So they're trying to figure all that out. So at the end of the day, these are good things. And they're also trying to rein in any potential risk to the consumer, to the investor, with Tether and other stable coins. And why is Tether an issue? So you can go to Tether's website, and there's a lot of debate about Tether, whether or not they're doing fraudulent things and pumping markets and things like that. And one of the things that is an issue is initially Tether and Celsius with the with their stable coin, the USDC, initially they were stating that they were 100% backed by the US dollar, and that's just not true. What we've come to find out is that very little of their holdings are in actual dollars, that they hold other assets, and more than 50% of their assets is commercial paper. And commercial paper is basically a loan to a business. And we don't know what businesses they are. We don't know, how much the loans are for. But at the end of the day, it's a note from a business to repay that loan. So if there is ever a run on Tether, if a lot of people want to get out of the market, they want to cash their Tether in for dollars, this is not a liquid asset, this commercial paper. That is not easily collected. Some of that will go bad. It is a high interest yielding instrument. There is a commercial paper market out there, just like there's stock markets where people, buy and sell commercial paper, things like that. There's also private notes that are created. Any business can issue a note to an investor in exchange for a return for them to borrow money. So it's just a note. It's a loan to a business for a certain amount of money, and very difficult to collect, especially in a panic. And if the markets are down and everything else is down, they've got treasuries, they've got cash. As you can see, cash and bank deposits are only 12%. So that's a dangerous thing. The only, treasuries are liquid, cash are liquid, money market funds are not liquid, very small amount there. Money market's liquid, I'm sorry, commercial paper is not very liquid. So 84% of their holdings are in this area here, where half of that 84%, 52% is commercial paper, the other 33 is treasury. So if there was ever a run on Tether and there was ever a problem, this could create a problem. But at the end of the day, the real risk is only about 50% of the value of the Tether floating in the market. And a lot of people, you'll see a lot of tweets about Tether being created and sent to exchanges. Well, what happens is whenever an investor wants to buy crypto, they buy Tethers. So Tether has to be printed in exchange for those dollars. That's sent to the exchange so they can then buy and sell cryptocurrencies. And then Tether takes the money and they distribute it among these assets that you see here on the screen. I hope you like that, distributed here on the screen like that into these different areas. So there is risk with Tether. Are they operating illegally? Are they artificially inflating the markets? That's up for debate. I don't have any evidence that they are or they aren't. But what I can tell you is what commercial paper is and what the real risk is. The real risk is if people want their money, they want to cash in their Tether, and Tether cannot cover that request, well, then you have a problem. They want to regulate is they want to get rid of some of that, information and risk out there, some of that risk out there that, Tether's potential and other stable coins potential risk could create in terms of contagion throughout the rest of the markets. So That's what a lot of this is about. Also, a lot of this is about wanting to just get control of the markets and things like that, to help control, fraud, theft, crimes, things like that. But this is a good thing. These are good things in terms of more broad scale adoption, bringing real institutional wealth into the space. And when I say institutions, I don't mean hedge funds, investment funds, things like that. I'm talking about life insurance company, sovereign wealth funds, pension funds. That's where trillions and trillions of dollars are that can drive cryptocurrency values much higher than where they are now. But those institutions, especially the life insurance companies, the sovereign wealth funds, and the pension funds, are not going to put assets into the cryptocurrency markets, especially lately, given all of the volatility and the uncertainty, until there is clear regulation rules and they know that they can, depend on the market and it's a little bit more stable, things like that. Because those, they're annuities. They have to generate yield, they have to generate income, and they have to pay out dividends, and they cannot handle drawdowns and fluctuations in markets and in assets that they invest in. So that's where, potentially $100 trillion or more around the world reside, are in those institutions. So when you hear institutional investors and broad scale adoption, that's where the bulk of that capital lies. Then you have also the general population, just in the United States alone, and retirement accounts, 401k, and cash accounts throughout the population. And the older generation, my age group, the baby boomers, have the bulk of the wealth in the United States in terms of savings and money markets and investments. You're talking $30 to $40 trillion worth of invested capital that could potentially, portion of that, some of that could potentially come into the crypto markets once you see more regulation, more stability, less volatility, more clarity, and especially a welcoming community of the crypto world for those investors to come into. So that's one of the things that really needs to change in the crypto community, is a more welcoming environment for outside investors to come in and place capital in the markets. And that's going to require regulation and stability. As far as this unchecked unilateral power to ban crypto transactions, they're primarily targeting illegal activity. And it's stuff that they're going to be able to pretty much pinpoint. It's going to be some sort of, terrorist activity, money laundering, things like that. So this is not something that they're just going to go after the average individual and things like that. And I know a lot of people think otherwise, but at the end of the day, they're not trying to just take people's money. They're trying to control and rein in some of this theft and extortion that we've seen with companies and things like that around the world. So that's mainly what that is all about. Markets today ended up a little bit down on the NASDAQ, a little flat on the Dow Jones S&P, but they did start up, right? So if you watch the markets, generally you're going to come out of the gates either high or low, big rise, big drop, and then we balance out at lunchtime. And then what's important is how we go into the close. That's what's really important. And for the last few weeks, we've been going into the close in weakness. We have not been going into the close up. It's been going into the close flat or down. And that's how the market's kind of tricky. If you go back and look at, the 2008 and 9 crash, that's the last biggest crash that we had. And how that happens, it kind of sneaks up on you and it kind of rolls over a period of time before you get that big capitulation at the end. So the markets are kind of setting up for an event like that because they know what's coming from the Fed. They know the Fed has to fight inflation. They know the Fed has to get tough. And the Fed did say, we are going to be less accommodative moving forward. So that's something to keep an eye on, is how the markets close every day. Now, one of the things that I wanted to take a look at as well is, the Bitcoin price action for today. I was kind of looking at the Pi cycle tops. I'm going to get into this in another video in terms of whether or not Bitcoin has already topped out when we hit 64,000 before we came back and hit 69,000. So this is something for another video on another day to take a look at. But what I wanted to do today was kind of check in with where we are on our recent theories with the price action and what we're trying to settle in on right now. Somebody asked earlier what this platform is that I use. This is TradingView. It's a free platform that you can use to kind of chart any kind of asset. And you can go over here. Let me move this out of the way here. So you can go over here and you can add whatever asset you want to look at, stocks, crypto, Forex, anything like that. And you can put it in your favorites over here, and a lot of customizations. They have tutorials. You can Google this on YouTube and get tutorials. There's a lot of really great free information out there. People teach you how to use TradingView. I am not a technical analyst, but I do use it to study price action patterns, things like that, just so I can kind of help make investment decisions and kind of get an idea of where price might be headed and what it's doing. And again, it's the higher time frames that we're looking at. So what we're talking about and we've been looking at is our, let's see here. So we were looking at the death cross and trying to keep an eye on that in terms of where we stand, and just, you know, from that time frame from the peak. The original peak, and I'm going to make another video of that, was 64,000, actually the top. I know we came back and, you know, we went a little bit higher, but was that actually the top and the peak of the cycle? And the pi cycle indicator showed that. We'll look at some other things in terms of whether or not that was actually the end of the bull market. And this all was just an irregular correction in terms of, you know, an artificial pump trying to get it back up for one more exit, which is where we're at now. And you know, a lot of people are talking about this irregular correction and how this worked. And, you know, you could see that this pump here didn't have a lot of support every time it was pumped up. There was just not a lot of support, a lot of buyers at these levels. So we'll talk about that in another video. So what we're talking about right now, from the peak to the death cross on each peak here, was the exact number of days. Very interesting. And, you know, how this price action's rolling out. And then I calculated over from that point to the bottom here, which gave us that February 14th target. So that's what we've been tracking to see how it plays out. We're at January 27th. We'll see what this does. And typically when Bitcoin is bottoming in some of the cryptocurrencies, you usually are going to see this double tap bottom before it takes off to its retrace, double tap bottom. So we're looking for that potential setup here. It could bounce around for a while, tap, and then go off if it goes into the retrace, depending on other, you know, this could all be invalidated. This is an idea based off of this death cross. This is all just an idea, but so far it's holding up. So far I calculated how far it could go down, and I said it could be around that 36,000 range. I know we're going to get wicks here and there, and that's okay. As I said, it's the closing time frames, your higher time frames, your daily, your weekly, and your monthly. That's what you're looking at. And our daily close so far is 35,000. So we're in the range that we've been looking for. And, you know, we'll see if it just dances around here, taps, and then goes into a retrace, which is what is typical for Bitcoin and typical for what we've seen in crypto. But if this was the top, then that could invalidate that theory. And definitely if we break 30,000, then we could just be off into a longer, more sustained bear market in that case. But again, I think there's just there was so much support here last time for 30,000. You know, we'll see if that threshold can be broken. And of course, that would invalidate all of this, at least right now. So after a retrace and we move back down, that's when I think that would ultimately really get tested. There are some people that think we're going to test that here right now in this cycle. And we might come down in a day, test that 30,000 and wick back up and then head into a retracement. That's kind of my trigger, is that if we get close to this $30,000 level and we wick down to 33 in this initial drop, if we start getting down into the lower 30s and testing these levels, that to me is an indication that we're looking for that double tap and then we're back off. And where it closes after that is important, because that could be the launching pad back into a retracement. And then we'll watch how far that retracement goes. And then if it rolls over at that point and comes back down, that's when we could see a real test of whether or not it's going to break 30,000 and go off into a longer, more sustained, you know, downward consolidation bear market, if you will. A lot of people ask, I'll tweet something or make these videos and they're like, is that bullish or is that bearish? I'm neither. I'm an investor. I'm opportunistic. I look for value. I'm a trend investor, trend trader. I invest with the trends and the price action of the trend. So I'm agnostic. I'd love to see the asset increase and go up, because everything goes up with Bitcoin, and I'd love it. I'd love to see it hit some of these numbers, but I'm realistic as well. I want to know what's the top, what's the bottom, what's the best case scenario, what's the worst case scenario, because you know, hope doesn't pay the bills, right? Profits pay the bills. So hope is not a plan. And you know, I'm realistic, and you know, I don't know how long I'm going to reside on this planet, because we will all check out at some point. So I want to make sure I'm maximizing all my opportunities while I can. And there's no guarantees in life or in the markets, right? So I'm neither bull or bearish. I'm always opportunistic and I'm always optimistic. I'm an entrepreneur. I've started, what I do is I invest in real estate, I invest in businesses, I invest in markets. And you can't do the things I've done without being bullish and optimistic. You have to have a positive outlook. You have to be looking for the upside, but you have to be ready, prepared, and understanding what the downside is and what the worst case scenario is, so that you can take that risk and take it in a calculated way. When I was younger, I was a little bit more of a loose cannon, and my younger years pre 2009, 2008, 9, you could argue I was very bullish on everything. It didn't seem like anything could go down. It seemed like everything was just going to go up, and times were good and everything was great till 2008 and 9 hit. Caught a lot of people off guard, took a lot of people by surprise. We've had the same conditions since 2008 and 9 happened. It's been pretty much straight uphill. Seriously easy monetary policy. We did not have that pre 2008 and 9. So Bitcoin and crypto has only existed in an extreme bull market with a very accommodative Fed. Bitcoin and cryptos have not existed in an environment where the Fed was not just handing out money and keeping interest rates, not letting interest rates rise. So we are going to now see a true test of the asset, which is great because that's what we need. We need to know where this asset stands. And so far, Bitcoin's been holding up pretty well, considered all of the pressure. These recent articles that have come out, you would expect those articles about regulation that the price would be under more severe pressure, but it hasn't. It's just continuing on its journey to figure out whether it wants to reverse course here, or if we're going to see more downside. And so far, it's trying to hold up and trying to reverse course a little bit. But it does look like we could see a little bit of downward pressure this weekend and working into next week, and then maybe that's when we're starting to get to that February timeframe, closer to the 14th. Hopefully, that timeframe kind of plays out. The real question is this going to be a longer move towards a retrace like we had over here with a little bit of a downward slope, or is it going to be less of a retrace over here? This was about 8 to 10 days over here when we had that double tap before we went to the retrace. So far, we are 1, 2, 3, 4, 5 days in here. So maybe this weekend could be the end of this and we bounce and we go back next week. I would love it if my date is invalidated and we start early. That'd be great. I don't think anybody would be upset by that. So far, the bottom number is holding strong, 35, 36. I said 36,000 range, but I think everybody's okay with 35 if we bounce and go from there. And then again, I'm not expecting a full-on bull market. I'm expecting just like this, a retrace, a little retrace. Well, I'm not expecting that, but a retrace and then kind of rolling over, continuing down, kind of more like this. But this could be our irregular retrace correction already. That's what we're waiting to see. That's what I'm going to talk about in the next video with that pi cycle top indicator and a few other things, is that this could have been already what I'm talking about over here, but it just got extended and exaggerated, and we may not bounce. So that is something that is in the cards and it's on the table. I'm not saying it is going to happen. It isn't going to happen. I'm just saying it's a potential that we're not going to see a retrace. We could continue down, and I'm going to show you why with some other indicators with the altcoin market, things like that. So that is the update for today. I hope you're having a great day wherever you are. I will be back tomorrow with more updates, and I wish you the best evening, morning, afternoon, whatever it is, wherever it is that you are in the world.